All right. Thank you guys for making it. I know it's busy time and you guys could have been elsewhere, but you came here, so I really appreciate your time. So let's get started quickly, and if others can join, they can join. So what I kind of wanted to do here is just talk a little bit about my background. I know you guys have been, seeing me on chat, and I just want to set a little bit more context since we're all here, and then we can look into the signals and all that nice stuff. So just a disclaimer. Um, so we are not an investment advisor, and so neither am I. Neither is RetailTrader.ai. So all of this is purely for educational purposes. It's not financial advice. Anything that's discussed here, presented, or interpreted. It's not trading advice. And we're not associated with any other companies, sponsorships, brokers, other financial institutions, not getting any kickbacks, none of that stuff. I will be mentioning about my mentor in the coming slides, but I want to make sure that everybody understands that he and Retail Trader are in no way related, not endorsing either ways. So I think you all know me on chat, but I just wanted to give you a quick background of how I started this. So I've been in the software industry for over 25 years, and I've been everything from a software engineer to an architect to various management positions. And most recently, I was an executive heading the engineering team at my previous company. I also have about 15 plus years of trading experience in total. I started to get interested back in 2008 during the financial crisis. I knew nothing about the markets, but I knew there was a lot of chaos. And all the chatter and stuff that was going on and all the craziness got me interested. So I began reading about it and checking out articles to understand what's actually happening, how does this all work. And then I came across this video from this guy who was, looking at uh, charts, and he was doing a fabulous job of, demonstrating what's actually happening purely in terms of price action. And so I got interested in that, and I began looking at more of his videos, and he eventually became my mentor. His name is Mark Shawzin, and he was a person that had worked at many big institutions, Bridgewater and uh, Drexel Burnham and Merrill Lynch and all of these institutions. So I knew he was the real deal. So it started off that way, and then we became a little close. So I did meet him in 2022 in Florida. I have a little selfie there. Uh, so if you want to really learn about price action, I think there's no better guy than him. Uh, and so, but again, I'm not getting any kickbacks or anything, but just telling you my personal.
What is his full name? I forgot, Prashant.
Yeah, it's Mark Shawzin. I
Okay,
will put it out there.
sure, sure.
And so that's sort of how I got him. And then, yeah, I mean, even recently we just talked. I told him we were starting this thing, and so yeah, we're pretty close. So what happened back last year was there was a massive fraud. Sometime in April, there was a massive fraud in my company, and uh, there was a big fraud of about $300 million, and you can read all about that in the SEC news articles and Department of Justice and all that. So I was there in this company from the beginning. So I was among the early employees, and I was there till the very end, till it went bankrupt. So seeing all of that, and I personally built most of my, well, not most, but all of my career based on integrity, and seeing that fraud sort of changed my mind on what I want to do going forward. Right. So instead of getting back into yet another corporate setting, I thought I will get started and do something that I really like. And you guys have seen me since 2020, and doing all the stuff on trading and on chat, and so I thought I would just take that forward and do something with it. So I didn't waste any time, and I started building RetailTrader.ai. And the objective was to really build something out there, and if possible, put it out there as a product where people can use it and hopefully benefit from it, and as a brand stand out from all the other scams that are out there. And there are so many people selling all these get rich quick schemes, and options trading and whatnot, trying to convert $100 into 100,000 in 1 month, and God knows what. So, uh, personally, I just want to make sure that we stand out. And uh, honestly, I don't really need to run the service, because the subscription amount that I get, to be clear, is 5% of what I make, and the rest of the 95% comes from trading. So my objective is to really help others out there and make them uh, get much more efficient at this whole painful process of staring at the charts till your eyes bleed. So this platform is meant to be a co-pilot. It's not an autopilot. Like, there are many people that sell these bots that are trading on your behalf and doing whatnot. Personally, I would never let any of that even come anywhere close to my account. Just imagine if the bot makes a mistake, or forget about mistakes. How do you know that the thing even works? Right. So I didn't go down that path. So what this is about is, it's about being a co-pilot. So it helps you take all of that market data and then distill that into a set of trades. And then you, as the operator or the trader, can then look at a much smaller list and execute selectively based on those trades. So it's designed for people that are in for the long run, because you know that nothing happens in 1 month or 2 months, and you really need to start treating that as a business, rather than just another side thing that is that you're doing without any discipline. It doesn't mean that you can't do it. It just requires the same level of discipline that you would put in a job. Right? If you go become a data scientist, you have a 4-year degree, you have a PhD or whatnot. So you can't just come with nothing and then take these signals and then say, I'm going to make lots of money with it. So that's not how this thing works. So the AI really does all the data processing, the heavy lifting, but ultimately you are the one that is sitting and pushing the buttons, right? So you look at it and validate it, and then you see if that makes sense and go for it. So although I've been trading for a long time, I actually never tell anyone that I trade. That's for a very good reason, because they ask me all these questions, and I would rather not be answering all of those questions. And I could go on with this list for weeks, and it will still be incomplete. Right? But some of the most common ones are, you know, which broker should I use? It doesn't matter whether you use a Robinhood or a Bloomberg terminal. If your methodology sucks, then you're going to get the same results, even if you're on a Bloomberg terminal, except you'll probably pay a lot more for that terminal as well. And then there's this people who are hunting for this magical stock. Right? One of the questions that I often get is, what is the leading stock that I should buy? To tell you the truth, I don't know what I'm going to buy until the previous day, right? Because I watch for the price action. So asking me for what that stock would be is a little bit far fetched. And going back, one can always say, I wish I'd bought Apple in 1984 and I had held it, and I would be a trillionaire. Anybody can say that in hindsight, but when you're in the moment, uh, trying to hold stocks, individual stocks blindly for the long term is honestly the biggest mistake that people do. It's very different from trading an index. And if you think about why, there is somebody who's sitting there trying to figure out what goes into that index. So if there's a stock that's underperforming in S&P, that gets kicked out and gets replaced by another one. And you don't know about that. So, but if you're holding on to some stock, the likelihood of that crashing is very, very high. The company risk is extremely high for stocks. So trying to hold individual stocks for the long term is honestly a big mistake. And people, when I talk to them, they say, "Oh, I am an investor. I don't trade like traders or some kind of lower beings." And then when you ask them what they're doing, this is what they're doing. The other thing that people really seem to worry about is taxes. And they worry that, okay, if I make too much money, I'm going to have to pay a lot of taxes. That's, if you think about the ridiculousness of that statement, think about it. If your boss comes to you and says, okay, you're making 300K, tomorrow you're going to make 500K. What are you going to say? Are you going to tell him that you're going to pay more taxes and therefore you're not going to take that promotion? It's sort of the same thing here. So the last thing that one should be worried about is paying taxes. In fact, even thinking that you're actually going to make huge gains is a big mistake, because 90% of all traders are losing money. So the thing that they should really be worried about is how much they can lose, not how much money they can make. And that's how you sort of invert it and look at it the other way. And averaging down, I think we have seen that even in our chat rooms, people trying to buy stocks that are falling, right? Trying to average down. It's the biggest mistake. And if you think about it, even if a 5-year-old sees it, they might come to you and say, hey, Dad, why are you buying that thing that's going down? Why don't you buy that thing that's going up? It's such a common sense thing. But and these are very intelligent people, right, making lots of money. But when it comes to markets, this is how they tend to behave. And it's really got nothing to do with their actual intelligence, just the emotional aspect that comes into play when you're uh, trading with real money. So there's so many of those, but these are the most common things that I've seen. So how does this whole infrastructure work? I think you guys, have heard me say models, but this is how it actually works, right? So this whole infrastructure is based on price action. Indicators like RSI, MACD, Fibonacci, stochastics, oscillators, and there's so many. There are thousands and thousands of indicators. Many are free, some are paid, and these are all nothing but noise. If you look at these trading ads, you will see people sitting with 4 monitors, and each monitor has 4 charts, and there are 50 lines on each chart, and you're supposed to somehow believe that these people know what they're doing. So we over here, we don't use any indicators at all. The entire model is based on a completely different way of thinking. So it utilizes, I don't know how many people are here from data science background, but it utilizes hybrid CNN LSTM model. So it's a convolutional neural network and a long short-term memory neural network. So what it does is it first passes it through the CNN, and the CNN is great at looking at spatial data, like identifying those patterns. So it actually passes it through a series of dilated CNNs and tries to assess the pattern. And from there, it passes all of that information onto the LSTM. And the LSTM is great at figuring out how that pattern is being formed, right? So what are the relationships between all of those data points? So it's great at identifying that. So those two combined together generate this probability score, and it's a statistical outcome. So when we trade here, we're trading on probabilities. We're not trading on certainties. So this probability is then sent through a couple of filters. The first thing that it does after getting that probability is, hold on, let me admit somebody who's trying to join, unconfirmed. Yeah, okay. I hope he's in. All right, sorry. So the first thing that it does is it does a walk back and walk forward. So it's got the probability, it identifies the turnaround point, and it's looking for turnaround points, mean reversion points before they happen, right? And if you're looking at it after they happen or while they happen, it's very difficult to trade them because they just rapidly move as soon as that change occurs. So it tries to figure out changes before they happen, and that's what that LSTM is looking for, underneath. So after it does the walk back, walk forward, it looks to see if that um, setup is really valid, right? Yeah, I see all these things, but do I really have something out there? And then after that, it looks at the setup quality. I know I should change that name. So it looks at whether it's a wide setup, high risk setup, uh, tight setup, all of that. And after that, if it thinks it should push it out there, then those signals show up on the site. So that is how it works, you know, from a technical standpoint, from the beginning to the end. Uh, so people often think that, if you have a higher win rate, you're going to be successful. That is not true. So if you have someone who claims that they have a 60% or 70% win rate or 80% win rate, you can be sure that that's fraud, because at 80% or 70% or even 65% win rates, the risk of ruin is extremely high. And the risk of ruin, there are various metrics that we look at in trading, and one of them is the risk of ruin. It's extremely high for somebody that is reliant on 70+% win rates. So the institutional grade signals are, and these are the top funds that I'm talking about, like the Medallion Fund, some of the best performing funds in the industry. Their win rates are anywhere from 50 to 55%. And so think about it, every, 1 out of 2 trades that they do fails. Right? So how do they make money? And that is true of these signals that we generate as well. The win rates are approximately in that range. So why would you even bother using this? So the reason is the win rate is the thing that is not the only thing that matters. What matters is the risk reward that you get. So if you are on a trade that gives you twice the return as your risk, or 3 times the return as your risk, which you call as the risk to reward ratio, that is the holy grail. So you can, for example, be wrong 60 or even higher, even 70% of the time, with a 1:3 risk reward ratio and still be highly profitable. And that's what institutions do. So they don't rely on win rates. They primarily focus on risk reward ratios, of course, coupled with win rates. So when you see those signals, uh, you should probably have that expectation that one out of those two is not going to work. So we'll look at some of those signals a bit later, and I'll tell you some ways by which you can decipher which ones are good, which ones are bad. So in the end, what the AI is doing is it really proposes, but you are the one to dispose, right? So just keep that math in mind as you go through your trading process. So with that, any questions, or I can just walk through the product and some of these signals. Does anyone have any questions?
Not right now. I think you can go ahead, Prashant.
Okay. So let me just quickly walk you guys through the product. So this is the pro plan that I have, and I think all the early members here are all on the pro plan. So it has a number of things. I do look at many of these things daily, and particularly the market briefing is worth reading because, and I'll tell you why. For example, here it says the market leaned positive, 52-week highs, double 52-week lows. So we know that things are pretty bullish in general over the long term. And then if you see, there is a noticeable divergence in the medium term momentum, where 62-month lows significantly outnumber the 6-month highs. So it tells you that there is a shift that's happening, right? So the earlier trend was extremely bullish, but now things are starting to turn around, is what this message is essentially saying, right? So it gives you some basic metrics. You have various filters that you can apply, and there's a chart here that you can also sort of look at. Tells you what's the high and highs and lows, number of highs and lows in the market, and you can see if you're seeing some kind of a divergence. It might be helpful in some cases to just get a macro view of what's happening. And that's one of the inputs that you have as a trader, right? So you need to keep that macro perspective in mind. It doesn't matter if you're, how good the stock is. Sometimes when things get beaten, everything goes to the dust. So you might have the best stock, but the worst trade on your hands. So it's generally good to align yourself with the overall directionality of the market in general. So this just tells you the overall health in the short term. Some of these are still okay, some are flat or whatever it is. And this just gives you a sense of what's happening, and you can filter it. Say, okay, I want to look at only the ones in the downtrend and see how it's doing, and whether I should short any of these stocks. So you can make some decisions, and you have the longer term picture on the other hand. So this is available for free for anybody to see. So if you can just create a free account, and you'll get all of this. The next useful thing is the insights. So this is something worth looking at once in a while. You don't have to look at it every single day, but some of the stocks, like what Rudra was mentioning at one point, I think Restoration Hardware was actually found here. We were looking at insights, and we found this gold mine, which is just printing money like nobody's business. This is one of those screens that helps you figure out the fast movers. So you can see that the overall trend is still pretty bullish. And I tend to often look at the last 3 months because that gives you an idea of which ones are consistently performing. And you can look at the top movers. And I remember because I look at it frequently, and the stock SanDisk, which is just going up like nobody's business, that was showing up repeatedly here when I saw it every time. But I hesitated to get into it because it was just moving at such a rapid rate that I didn't want to get in that and get burned. Alcoa was another one that was repeatedly showing up here, and it was just up and up and up nonstop. So this screen, and many of us, I think a few of at least a few of us have been trading this First Majestic Silver for some time. And it's been, on a tear. You can see it's been up 40% from its recent lows. So this is the kind of stuff that helps you pick the winners and also the losers if you're interested in shorting. So this is something certainly worth looking at every once in a while. Then we have the signals, but I'll come to that when I show you guys the trades. Right. So earlier I spoke about the CNN-LSTM neural network and all that stuff. So the trades show up here. As it so happens, we have today's data already available, so we can just go look at a few of those right now. So let's, there are not many mega caps, so I think there's nothing in the mega caps. Yeah. So just put out all the large caps over here. So let's go through a few one by one. So let's look at this Amphenol. And often I don't even know what these companies are doing, right? Nor do I really care what these companies are doing because I'm
Yeah,
trading for this.
yeah. Prashant, just question. On the top right, you mentioned the quality high, good, and low. Can you just elaborate a little there?
Yes. So I think this is the setup quality.
Uh-huh.
This is the one where I've been saying it should really read as wide, medium, and tight, right? Tight stops. So it's actually in reverse. I should, well, I've been saying that for a while now. I should change the meaning. I find, from my experience, I find that what it says low here actually seems to perform better because those are wider setups. But those wider setups also have a pretty wider range
Range, yeah.
target. So you're not going to get stopped out of those trades very easily. And this risk here is determined based on the probability score. So the model thinks that there's a high probability of it happening. You will see, the risk being 0.75 to 1%. If it thinks that, yeah, it's a medium setup, then medium probability, then that risk gets set to 0.5 to 0.75%. Right? So that's how this risk thing sort of works. But you're right, I should change the name. So I would look at these low qualities with much more scrutiny because those are the ones that really do well. Yes, Harsh.
I was doing other way around actually.
Yeah,
Yeah.
I hear you.
Same here. Like, if you go through a couple of examples, maybe it will make
Yes.
us more clearer. Because whenever I used to see high, I thought, okay, it's very good setup, and then
Yeah,
try to
Yes.
follow that.
I hear you. The wording is misleading.
Okay.
So let's go through some of these. So we go through this thing, and like I was saying, I don't even know what these things do.
yeah.
And you can see, That's just the truth. I mean, the way to look at it, so you need to look at it completely from a data perspective, right? These are just numbers and alphabets. These stickers are nothing. It's just something I enter into the whatever broker that I'm using, right? And these are just numbers. I actually look at that way even for the profits. I just look at it as some number. I never usually try to think of it as some money that is being made, unless it's something very significant, like, okay, oh, it's like 10 grand in one day. That's something worth looking
Um,
at. I never look at it as I just look at it as a number. So this one is an excellent case, right? So you can see today we had this key reversal. This particular price action here is
mhm.
an extremely bullish signal, right? So it started over here and then it went all the way down. But at the end of it, we're sitting here above the high of the previous day. So this is an extremely bullish signal. So what the model is telling you is put in an entry here at 151.79, just a tad bit higher than where it is. Put a stop loss here. Often you can put a stop loss here, but what I've seen is that these days, I guess institutions have figured it out and they cross slightly below this and try to take you out of the trade. So this is a good one. So you could put your stop loss here and then your take profit. And to me, just as a chart reader, I think this is an excellent setup. Right? So this clearly has a high probability of going there based on reading the charts. So let's look at another one.
So what do you usually don't put a stop loss at all for any of the trading
So
because all these guys figured out now.
no, this one is a very good stop loss, right? So this
Okay, okay,
is highly unlikely that it's going to come here. If it gets here, that means you're in the wrong trade, right? So that means
okay,
it's going the other way.
okay.
What will more likely happen is it'll come somewhere here,
Mhm.
just below this open,
Okay,
and then it'll race up higher. Uh,
okay,
so that's the way it sort of typically unfolds itself.
okay.
So let's look at the next one, App 11. Okay, we've shorted the stock, I think, multiple times during the pandemic. Okay, so or in 2022 something.
22. Yeah.
This one is also an excellent setup, right? So this is actually a textbook definition of a double bottom with an inside bar, right? So it's a double bottom that has not yet been fully formed, and it is just about to be formed. And you can see how precisely the model has sort of figured this out, right? It says, okay, here you put your stop loss here. This is the base. It understands that here is where you need to get in, and this is your entry point. Is your stop loss, and the likely direction is here. And this is another high probability one, right? So the nice thing is, I think the risk level, it's a fairly tighter one. Actually, it says low. I think it may not be as tight as it looks on this chart, but this is like another really good setup. Just as a Since I know and I can probably do technical analysis better than a certified market technician, I can tell you that this one is an excellent setup. And this is a textbook definition of what I would look for if I were independently reading a chart. So this is a great setup. Let's look at another one. Um, what happened? Something happened, it just changed.
Can I go to something which is high and look at that? Like, we'll kind of get a
This one, okay.
perspective of low and high.
What does it say? It's a short. So this is a low conviction one. right? So part of, like I was saying, so if you want to, be successful at this game, you have to learn a little bit about price action. Because, like I said, it's like trying to do data science when you've never touched a computer, right? So you definitely have to have some degree of background with respect to reading charts, at least to bare minimal extent. So I would actually highly recommend that. In order to learn that, I've made a number of videos in the past. I think during the pandemic, it's on my YouTube channel. So if you go to the site and go to the footer, there's a link to YouTube. And in that channel, if you look at the older videos during the pandemic that I created, those actually go through in a lot of detail on what kind of stuff you should look for in order to get into a trade. Because back then I had to actually spend a lot of time reading those charts. Part of the difficulty in all of this is figuring out which trade you want, which one actually works, because there are 2,000 stocks and all these tools out there require you to enter the instrument name, and nobody has the time to sit and sift through hundreds of charts. So uh, that was the whole reason I built this. But this particular trade is not a high conviction trade, so I would not take that. But the nice thing about it is because it has to sort of cross this level, if it ever goes up, what will likely happen is that the following day, the candle is going to start here, right? So it's going to just skip this whole thing and it's going to start here and it will likely race up. This is actually looking like a bullish setup. So, but because you're requiring market confirmation, so you need the price to hit this point before your trade gets triggered. You're going to avoid the trade, right? So that's the beauty of relying on market-based confirmation. So now we're doing all of this neural network stuff, the setup validation stuff, your judgment, and then as a fourth layer, you're adding on this market confirmation. So if it goes the other way, then you're not going to get into that trade. So that's the beauty of this. So let's look at Bank of Montreal. This is actually a reasonable trade. So if you look at the pattern here, it's a classic. Uh, it looks like what's forming is a classic double top. It's not yet formed fully, but you can see this key reversal here, which is the other way. And the previous key reversal we saw was bullish, but this one is bearish. So it's going the other way, and the models have caught this, and then it saw this inside bar, which is actually a fabulous place to enter. So an inside bar usually indicates a low volatility period where your risk is extremely low. So while this thing says quality, high, yeah, that's because it's the tight stop that is out here. But this is actually a very high conviction trade. I think this looks nice to me. So I don't know, is there any particular one that you want me to look at? We can definitely look at that.
Yeah, just look at the CRM today.
Okay, that one was my, I didn't read the chart, but so this was a long signal that was generated on Feb 19. That was 5 days ago, so it's invalid. But I think that trade might still be in play because it never hit that target, right? Normally, I invalidate that if something is older than 3 days, I just out the door. In this case, what's happening here is it's trying to form a bottom, right? So it's going sideways in a very tight range, and the model, because it's built to look for things before they happen. At this particular point, it said, okay, looks like there's some reversal coming up. But then there was chopping around happening, and it still hasn't hit that entry point. So I'm actually in Salesforce myself right now, although I didn't look at this particular signal.
Okay.
That's interesting. Let me see what's happening with Netflix and see what it says. This is one thing that I need to fix on the charts, but let's look at it. Wonderful. And I'm in Netflix, so I just got in today, and you can see this. It found this key reversal. I mean, it's just amazing. Often I'm surprised myself when I see how well it detects the patterns, because this is a textbook definition of a double bottom, right? So that you have double bottom with a key reversal.
Yeah.
So you have a key reversal, and now I think it's just going to go fly up. At least that's what it seems like. Yeah, so that's how I tend to read this. So I look at what's happening around the area, and I look for the bottom formations or top formations. If it looks muster, I don't have to read all of the previous 100 years of charts, right? So I just look at the last couple of days,
Okay.
and I can tell, okay, immediately by looking at it, yes, this looks like a double bottom, right? So just knowing even the basics, the very basics of technical analysis, something as simple as a double bottom will take you a long way. So you don't have to be an expert market technician. You could just learn what a double top and a bottom looks like. So there are typically two variants. You have a double bottom with an inside bar, and you have a double bottom with a key reversal. The previous one we saw was a double bottom with an inside bar. This one is a double bottom with a key reversal, and just reverse that thing for the tops, right? So that's all you need to know. I think even to sort of navigate this better than most of the people that are out there. Yes.
Prashant, so the risk 0.5%, 0.575%. Can you explain again how it works?
Yes. So this risk is for position sizing, right? So when the neural network runs, it generates this probability score. And if it thinks that there is a high probability of a turnaround happening, it flags that as high probability. And for those high probability transactions, we have a risk of 0.75 to 1%. If it's a medium term, sorry, if it's a medium level probability, then it will propose a risk of 0.5 to 0.75%. And what I mean by that is, if you take your entire account, take 0.5% of that, the amount that you would lose from the entry point to the stop loss is basically 0.5% of your account, right? So that's what it means.
So basically, you have to have a stop loss set.
Correct.
And then if it hits your stop loss, what you're going to lose is that range.
Precisely, yeah. That's your, well, not maximum, but generally the max loss, right? Because you can have something that just drops the next day by 25%, and you might be in a soup, but at least in general cases, your risk is 0.5%.
So how does that play with the setup quality?
Yeah, the setup quality is the width between percentage distance between the entry and the stop loss, right? So if it's I think the way it works, if I recall, I don't remember the exact numbers, but if it's less than 1%, I think it says it's a low, which means actually it's a tight stop. Well, No, means
Wide
yeah.
is that, right? Low means wide.
So if it's greater than 1.5%, it means it's a wide stop.
It's
So
other way around.
yeah, it's confusing me now. So I think I should change that.
So that means like basically the chances of hitting stop loss is less likely, right?
Yes,
If
yes.
it's wider.
And I have found that the ones with the wider stops, and because I analyze all of this data retrospectively as well, I run those all these signals and see how it's doing, and I have various metrics that I look at. So I have found that these perform generally better than the others.
Okay.
No, how do you go the position size? You keep increasing when it goes in our side, our direction, or initially based on a setup, you just go all in. How do you go?
Yeah, so generally the way I look at it is a binary operation.
Okay.
Most of the time I'm looking at it as a single trade. So it either wins or it loses. There are
Okay.
rare cases where I might add more. For example, I think I did that with restoration hardware, where it went up and then it formed another setup. So
Yeah.
I added a bit more. So those are some cases where I tend to do that, but otherwise, I typically look at all of these as binary transactions.
Okay.
So the other one that we have is curated trades, and I have the actual performance charts, but it has some internal stuff which I should be removing before I show it here. But it's still tracking towards about 45% annualized returns as of today. Right, so
Ah,
these are the trades that it is active in, and it says put a pending order for all of these. So basically, the way it works is it runs a cap portfolio simulation, and I don't know how much you guys know about it. So it's like you're trading in your real account, and then there is a cap to how much you can, or the max capital that you can buy, that you can put into a trade. So here I'm saying the max cap is 25 grand. So that's regardless of what risk is. For example, with 0.5% risk, your model, your calculation might tell you that you need to put, I don't know, $50,000 into it. But what this will do is it'll cap it and say, no, 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 I'm not going to put 50 grand. That's too much money. It's going to blow up my account if something happens, right? So it just caps it to 25 grand. And this is your total equity. So if you just modify those numbers, the other numbers will also change. So generally, uh, for people that haven't been trading or are new to it, the suggested risk is definitely 0.5%, or I would even go lower than that. It might not look like you're making much, but that's just how it is, right? I see all these people trying to trade options, and they're trying to hit lottery tickets, trying to convert $1,000 into 100,000, and trying to make 10% returns a month. I mean, 10% returns a month is extremely. I mean, it's almost an impossibility, because if you, again, this is one of those things where common sense goes out the window, right? If you do the calculations on your calculator, I can even mentally do that. So if you compound 1.1 to the power of, I don't know, 5 years with 60 or something, you'll end up with $1 billion if you're trading with $100,000, right? So if you think you're going to convert 100,000 into $1 billion in 5 years, forget it. Uh, but that's just how people think. They think 10% is easy. And then there are other people who say, okay, I'm going to just blindly put some money, and if that thing goes up by $1, I'm going to get out of that trade. And the next thing they know, it's down by $10. There's no hope for recovery. So being systematic is what this is all about, right? So that's why it tells you precise stop loss target, so you don't have to, you don't get into that kind of mess to begin with. Any other questions?
So this curated trades, how do we use? We just need to
Yeah,
use for
so
tracking or trades, or like.
yeah, the only this one is, I would say, is more suitable if you you don't want to select things yourself. So because what it does is, this curated trades does is it looks at places where hedge funds aren't sitting around, right? So if you look at some of these stocks, you can see it's it's a low dollar stock. A hedge fund would never touch anything under $10. And so these are mostly small caps, if you except for the
Okay.
Tesco, which is bigger.
Mm-hmm.
It's a mix. It's not that it's
Okay.
only looking at small caps, but it looks at these areas where um, you have a better advantage as a retail trader, where
Okay.
you don't have whales sort of moving prices up.
Okay.
Because when you look at stocks like Apple and all the top stocks, they have a very, very high degree of volatility and swing around a lot. That's because there are so many funds and pension funds, sovereign funds, all of that piled into it, just swings a lot. Whereas these are much more reasonable, right? So they don't have that same kind of pattern, which gives retail traders a bit of an advantage. So that's what this one is for. So it tells you, okay, here is what you should place. And today I closed this. Um, we hit the target, or it'll tell you if it has to be closed. It'll tell you to close it. It's an expired trade. And if it didn't hit the entry point in 3 days, it just says, okay, it's canceled. The trade is canceled. So it's an automated um, life cycle management. It's more for people that are okay with, when a simulator says it's 43% returns, you should always cut about 25% of that, right? Because there's always other slippage. This simulator takes into consideration all that slippage, but in reality, there's additional slippage. So you should cut that number uh, by about 75% to 75%, and then that's the expectation that one should have. For
When you
me,
say 43%, it's a win rate of 43% or a profit of
no, it's the
is it-
annualized returns of 43.
Oh, okay. Okay, analyze, okay.
Yes, yeah.
All right.
Personally,
What-
since I know I take a little bit higher risk, right? So I take anywhere from 1 to 2% typically, and sometimes 3%, depending on if it's an extreme conviction trade. So that's the general level of risk that I take. But then I've been doing this for a long time, and I know how markets behave. But for people that are getting started, anything more than 0.5, I think, is not good.
So is there any way that we can add the futures here?
Futures, it's a question of getting this data, and
Okay.
I will look into that. I have Forex again, it's delayed. It's still tricky because many of the licenses sort of need to line up well, because for commercial purposes, there are different licenses and different pricing. So it's a little difficult to find, these the data for some of these without paying exorbitant sums of money.
Yeah.
Any other questions?
Yeah. So one question on the previous screen, like you mentioned about the inactive status, right? Is that basically the order didn't get placed and just got canceled, or did it get placed and then got canceled?
It only shows the ones that you placed, which didn't hit the target in 3 days, and it says, okay, cancel it. Right. So that's what this means.
Is it personal, like to myself, like is this like, since it's simulated, it's placing and then moving to active and then closing and canceling?
So the way the entire system is built out is these signals that is generating today are for executing the following day. Right. So most of the systems and platforms are out there. They generate these real-time signals, and nobody has the time to, sit there. It just pings you and says, "Go sell this thing," and who's gonna sit there and watch your phone and sell it when you're in the middle of a meeting? So this one is based on a completely different approach. So it's for the next day. So when it says to place, that means you're placing it for the next day. You're putting in a pending order for the next day. And when it says cancel, at the end of the day, you come back from work or whatever, you say, okay, it's sitting here and cancel. You just go to your broker and hit the cancel button.
Okay. And it's so like the question again, like I had is it personalized to me? Like, is it just signaling me to place an order? Because I see, like, we go to the next tab, like actions, there's a button says place trade. So I don't know if it's recording my action or is it just telling me
just asking you to perform that action. So it never records any user actions, and none of this stuff is personalized to the user, right? In order to do that, I have to, it's a whole set of other regulatory.
Yeah, I was just confused because there's a button like, okay, I thought it's, if I buy in my brokerage account, I have to place an order, it records in the ledger and then like tracks that or whatnot. It's not, okay.
Yeah, because to do what you're saying, to create a personalized list or to actually go and execute that stuff, it needs a broker. It needs me to be a financial advisor. And if I'm a financial advisor, I can definitely not put the product out there.
Yeah, of course, yeah.
Honestly, I don't want to be a financial advisor.
No, what I meant was it was recording that status, like, because once from your brokerage, you're recording and then track.
I see. That's a good point. We can always add something where you can go in and say, yeah, this is done. That helps.
Yeah, it might help actually, because you have to track these trades that you're placing if you have many trades.
So basically what you do is you look at this column and at the end of the day and say, okay, here's what you need to do. 1, 2, 3. And these are the ones on the right. Cancel, cancel, cancel. That's all. And then the next day, if there's something to be placed, it's not going to show this ticker again. And it's going to show you the new ones.
So this kind of follows the market timing in the sense like that it gets updated after the market close.
Yes. All of this is based on multi-day trends, right? So it takes all of this data after close and analyzes that, and this whole system is looking for multi-day opportunities. And it's not, and typically the best, because I've done all these simulations, I know the time frame that you are generally looking at for a good trade is between 3 to 10 days. So that's the general time frame where you get the maximum benefit out of many of these signals.
Okay. And when does it refresh? At the end of the day, what time
Well, typically, I give it a little bit an hour or two after close. I think it runs at 3, and by 5, it's typically ready.
Got it. Okay. So anytime after 5, I can go back and see the latest updates.
Yeah. I could put in a refresh date or something here.
Yeah, that'd be great.
And can we use those signals for options also?
Yes. So regarding options, the way I approach options is I always look at the directionality of the stock. Right? Because again, I see all these theoretical stuff that people are talking about. I'm gonna buy this thing at low IV, sell it at high IV, and do this and that. I'll just tell you the problem very state it very simplistically. In this whole exercise that we talked about, there is only one decision that we are making. There's only one thing that we need to figure out. Am I going to buy or am I going to sell? That is a hard enough problem. Now you add all those variables in the options, the IV, the strike price, the calendar dates, and this and that, and the spread and liquidity, and God knows what other variables. Like that's a futile exercise. I see people trying to do that, and it just baffles me. So I look at directionality of the underlying stock, and if it says, okay, I got a key reversal, it's showing up, and it seems to be generally heading in the right direction the next morning, and I usually look at the first 30 minutes is generally it goes the other way. So I wait for around 7:30 in the morning or so Pacific time. Give it a little bit of time for it to do whatever it really needs to do, and then if it looks good, then I enter it, and then I look for options that the strategy that it's a little complicated. I don't know if I can explain it really well, but uh, there are various. I look for different kinds of variables there. So now there's also an expectation of when it's going to hit that price, right? So whether I go with out of the money options, in the money options, at the money options, deep in the money options, all that is situational, right? So it highly depends on what kind of trade it is. In general, deep in the money is it has a bigger delta, which means it correlates with the actual stock price. But the challenge with the deep in the money is also that they have very wide spreads. So the difference between the bid and ask is pretty high. So you want to so you have to have a good broker, or you have to be smart and try different things so you get the optimal price. Often what happens is you go buy it at the ask price, and that's just way too high. So it's a highly situational thing when it comes to options. Certain places where I've done out of the money options are recently with Occidental Petroleum, because that stock is nobody's watching that thing, and I'm getting strike prices that is just nearby, just $1 up, which is trading for cents, and and this is like 3 weeks out. Not cents, but a pretty good number. So in such cases, I just buy a lot more of those OTM options. But generally, I prefer ITM or sometimes ATM. It's highly situational. So dealing with options is a whole different exercise, which requires a lot more calculation.
Yeah, thanks for the information, Prashant.
Anybody else? Anything? Right. So we will get back to the So I know many of these you guys are quite a few members out here. So and they're sitting at the founder's price. That's going to be unbeatable. But for others here, in case they're interested, so I do have a promo code. It's valid for the next 48 hours. The promo code is launch 10, and it's a $10 off perpetual. So it's $39.99 forever until you cancel your subscription. So if you would like to use that, go ahead. Otherwise, I hope that you guys learned something out of this webinar. And if you did find useful and the math first approach and all the stuff that I talked about, my request to you guys is to please spend a few minutes and leave a review on Trustpilot. So if you go to the top of the site, on the top, let me show you, it's right here. On the right hand side, there is this link, and what really does is it gives it a little more legitimacy, right? So this is a small company, and then there are all these guys trying to sell all kinds of fantasy stuff, which is never going to happen. So your reviews here are going to help give the credibility that it needs. So I would really appreciate if you guys can provide your honest feedback. It doesn't have to be, it's not like I'm asking for 5 stars. Whatever you got out of this, if you could just put it in here, yeah, I attend the session, or whatever you want to write, I would really appreciate that. So that's pretty much all I had. Unless there's something else anybody wants me to talk about. All right. Okay, guys, I hope you found it useful. This is the very first webinar. Yeah, it's interesting that quite a few people made it, although with short notice. Ken, I really appreciate the timing. I know you guys are going home and you have other better things to do, but you came here, so I really appreciate that. So thank you, guys, and I will see you guys next time.
Yeah, thank you, Prashant. Thank you.
Thanks,
This was
Prashant.
very helpful.
It was a really good webinar.
Yeah, it's definitely helpful.
Thank you, Prashant.
Hope we can do this more often.
Absolutely. So I will put the recording out there, and
Okay.
I might use it for some marketing purposes. So I'll just put it out so people can learn about what we do as a platform. So thank you, guys. I will see you next. All right.
Thank you,
Bye.
Prashant. Thank you. Take care.
Okay,
Thank
bye.
you, PR.